Welcome to my video on candlestick reversal patterns and forex trading. And in this video, I'm going to be discussing 4 important patterns that can give you traders valuable insights into potential price changes in the market. Okay, the candlestick patterns that we're going to cover is the shooting star, the inverted hammer, the engulfing candle, and the doji. Okay, so just to clarify here, these are all going to be reversal patterns. Okay, so if you have a strategy where you're playing in favor of the trend, then what you want to do is you want to wait for a pullback into likely the EMAs or the range filter. And once you get that pullback during a strong trend, then you're going to look for these reversal patterns. Okay, these reversal patterns can indicate that the price is going to stop the pullback and continue in favor of the trend. All right, so the first one that we're going to look at is the shooting star pattern. So it's essentially, so here's a shooting star pattern here, a candlestick pattern. You have this wick at the top. It's like a falling wick within a small box here, small candle body. You'll see you have another one here, shooting star. So it's like a falling star, it's shooting down. Example of it in an uptrend. So you see the price is climbing. You get this shooting star single stick candle pattern, and then you're looking at a large downtrend following immediately afterwards. It's a very simple one stick candle pattern, and you can see here is another example, and here is another example. All right, so the next pattern that we want to look at is going to be the inverted hammer pattern, which is very similar to the shooting star pattern. And you can see it here. It's basically the same thing but reverse. So when you have a downtrend, when you get to the bottom of the downtrend, you're going to get what kind of looks like a hammer here, or the opposite of the shooting star. And that's when you're going to look for an uptrend afterwards. So here's an example. You're on the downtrend. You have this long wick with no shadow and a body at the bottom here, which is going to indicate that you're likely to face a reversal. And then you're going to reverse. Okay, here's another one. Here we go. You see, and then we have an uptrend. All right, one more time, and there we go. It takes off. All right, inverted hammer and the shooting star pattern, basically one's bullish, one's bearish. They're very, very similar, both reversal patterns. Okay, the next one that I want to check out is the engulfing candle. Okay, this is a very, very common reversal pattern here. It's basically where you're going to get basically just a big candle that engulfs the previous candle, and you really want to look for small or similar sized wicks. All right, so you can see that this candle here covers the entire body of this candle, small wicks. This is a bullish engulfing. All right, here's a bearish engulfing. You can see in this example, it's the exact opposite: bullish engulfing, bearish engulfing. Let's check it out on the chart. Here we go. I think this is whatever crypto, and you can see here you're in an uptrend line, and you get that engulfing candle, and that's the sign that's likely to keep going higher. Here's another one. You see it's going to completely engulf a few of the previous red candles, and here we go. Here's even some more different types of bullish engulfing candles. All right, and then the final candlestick pattern that we're going to look at today is going to be the doji reversal candle pattern. Okay, dojis, if you guys aren't familiar, they look like this. They're different type of dojis. You have a dragonfly doji, a long-legged doji, and a gravestone doji. They're all, a lot of different people call them different things, but this long-legged doji is obviously the most common. We can take an example of it here. You'll see basically a doji represents that the market's very uncertain of what they want to do, which a lot of times leads to reversal. So you can see here, price climbs, you get a few dojis, and then you're looking at a downtrend. Kind of the same thing here. Price is climbing. It's a very blurry picture. Price is climbing. You have these dojis here, which are basically reflecting immediate downtrends afterwards. Here you can see one the opposite way. It's coming down, big dragonfly doji, and you're going to get an uptrend afterwards. Here we can take a look at some more. Doji A, Doji B, basically huge points of, indecision. And if you're in a downtrend and now you have a big point of indecision, then it's likely that that downtrend is going to reverse. I mean, because now no one's quite exactly sure what to do, and you basically have lost momentum. Here we can take a look at a few more dojis. And here's one on the chart. You see indecision, reversal, a trend possibly. Here's another one, downtrend. You come up here, dojis. Here's some hammer patterns. Essentially, dragonfly dojis. Here's another one. So essentially, that's the 4 candlestick patterns that we're going to be looking at today, it's important to note that these patterns should be used in conjunction with other technical analysis tools and not relied upon solely. So that's really important. These dojis and bullish engulfing and bearish engulfing and inverted hammers and shooting stars, they're all basically 1 or 2 stick candle patterns, and you're not going to trade off these alone. These are basically going to be a confluence for whatever trend you're already following. So if you're following a trend scalping strategy like the ones that we have in our Discord in the link below, then you're going to look for these signs of reversal after you have a pullback into the EMAs or range filters to kind of confirm that it's likely a reversal is coming soon. So, thank you for watching. Make sure you always do your own research and trade responsibly, and check out my other videos here, and here to learn more about our free strategies. And don't forget to join our Discord, and I'll see you guys next week.